Hi, I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a guy who has his own website. He's had it for a while. His own investing and geopolitical website. He follows investing, and especially gold and silver, and also all kinds of investment. He has deep Wall Street experience. He follows geopolitical stuff for his subscribers. We're talking about Craig Hemke at TF Metals Report. Craig Hemke, thank you for joining us today on USAWatchdog.com.
Greg, thanks for having me back on. It's always a pleasure.
We got a full cornucopia of stuff to talk about because you write a lot of stuff and give your analysis on markets, on geopolitical, and all kinds of stuff. And let's start with just a quick thing about the election cycle. The Republican convention is going on. Are you one of these people that think, oh my gosh, we're not going to have an election, or do you think the markets are going to crash and Obama will start martial law? What's your take on what's going on? Well, just a thumbnail.
Put me in the camp of there will be an election on November the whatever it's going to be, and that there will be a new president on January the 20th, which means we only got 6 more months to go of Obama. So today's an important anniversary, right? July 20th, and that's January the 20th. So we got that going for us. Whether the next president will be any better, we'll see. But I'm not one of these guys that thinks, forces are being pre-positioned and crises are being pre-planned so that the election won't happen. I'm sure it will, and we'll just see who the electorate gives us next. I learned a long time ago, Greg, to only try to play the ball on my side of the court, and not get too upset or angry about what happens politically, because ain't a thing I can do about it anyway.
And how do you think the markets are going? I mean, Deutsche Bank looks weak. The Italian banks look weak.
Yeah.
I mean, that is not a way whacked out theory that we could have a pretty good market sucked down, correct? I mean, we have a lot of black swan. Turkey's in trouble. We'll talk about that in a minute. Turkey's undergoing some real machinations. Do you think we could have some sort of black swan? Are we set up for some sort of possible market takedown this fall? What do you think?
Well, Greg, first and foremost, whenever we talk about whether the market's going to go down, I have to itch my nose for a second. I got a little something flying up my nose. Whenever we talk about that, you've got to remember, and everybody listening has to remember, that unlike any other time in the past, the central banks, the global central planners, try to influence the markets to get them to do what they want. And they're able to do this because everything now is driven by computer. Over 80% of the volume on the New York Stock Exchange comes from high-frequency trading computers, just swapping stocks back and forth, trying to clip each other for fractions of a penny. It's not mom and pop buying a couple hundred shares of Coca-Cola because the fundamentals look good. Well, there may be a little bit of that, but that's what it used to be 20, 30 years ago. Now it's all HFT driven. And so if you want the stock market to go up, you being a central planner, then what you need to do is somehow impact the inputs that these high frequency trading machines follow and influence them to buy equity futures, buy ETFs, buy, whatever to make the stock market go up. There's a couple of key inputs that these HFT machines follow. One of them is just a simple Forex pair, as we call it, of the yen versus the dollar. That's one thing that gets influenced. We've seen that rather dramatically in the last week and a half. They also track what we call the VIX index, which is a volatility index. These are two things that the central banks and the big banks can easily influence and then get the desired result that they want out of the machines that make the market go up and down, the global flow of funds. So when we talk about whether the market's going to crash, heck, we've been talking about how lousy the fundamentals are and all of the reasons for the markets to crash now for 5 or 6 years. And it just keeps going up because of the impact that the central planners have in driving the markets, the stock markets. Use that kind of, I should give it like a little air quote thing. You getting the stock markets to do what they want them to do. So should there be a market crash? Could there be a market crash? Of course. The situation with Deutsche Bank is significant. They are carrying a derivative book, a total notional value of derivatives that's in excess of 50 trillion, trillion dollars. They are a dangerous systemic risk to the entire global financial system. But at the same time, that risk keeps getting minimized by infusions of cash, from central bankers and purchases of their debt. So we'll see. It'll be very interesting to see as we go through the fall. I think this vote by the Brits to exit the EU, though not an immediate kill shot to the euro currency, is a fatal wound to this euro currency that's been around for 25 years. And as that ripples through the system let's call it months ahead, that's going to create more problems too. But anyway, the long story short, do I expect a market crash this fall? No, it may happen, but I'm not sitting here saying that it has to happen or that it's going to happen.
What do you think about the gold and silver? Before we go into gold and silver, a lot of people are sitting here going, "My gosh, we've had this weak economy. We got this, a record number of people on food stamps and on, out of the workforce, and there's no, you have big market people saying that there's no way that should be going up. The fundamentals are divorced from reality. I mean, big people warning about how things could take gun lock and." The former PIMCO guy, Bill Gross, and Carl Icahn, and we're talking about these negative interest rates and how this could blow up the system. Why are they saying that then? Because that's not just a few people, like in their basement, in their mom's basement.
Right.
You're talking about how terrible things are. Why are they saying that? Well, the fear's unfounded, or are they founded?
No, they're founded. And there's every reason to think that the situation, as we were talking about with Deutsche Bank, is untenable. And then eventually it will crumble, and already we're seeing tremendous stress within the Italian banking system, and that could be enough to bring down the European banks, regardless of what Deutsche Bank system situation is. So they're absolutely right to identify all of this. But at the end of the day, again, what people have to realize is this notion that there is a rational market that is operating behind the scenes, that there are human beings making rational decisions based upon long-held fundamental beliefs and things like price earnings ratios and earnings estimates going forward and all that kind of stuff. That doesn't have anything to do with anything. The main thing that happens, this illusion of global equity markets, is these high-frequency trading machines that are being led by the nose by these central banks, which affect the key inputs, whether it's movements in the volatility index or the dollar yen. Sometimes it's crude oil that these machines follow. Anyway, it makes the machines, which are trading this kind of global flow of funds, I don't want to necessarily call it speculative, but just a global flow of funds, get them to buy whatever they want them to buy. And it works on almost a daily basis.
So humans, basically what you're saying is humans are not in charge.
Yeah, right. Now it can overwhelm the system. If you go back to August 24th last year, almost a year ago, remember that day the S&P almost opened limit down, the Dow opened down 1,000. Remember, it was kind of a culmination. It had been a real bad week the week before, and that was we call Blue Monday. It wasn't Black Monday, but it was Blue Monday. And what was going on? Well, that dollar yen was crashing, which meant the value of the yen was spiking. But because the USD JPY is the symbol, because the dollar yen was going down, all of these machines were rapidly selling everything that they could get there, that they could sell: stock index futures, individual stocks, ETFs, and there were no bids. And so everything went bidless and everything just crashed that morning. And that's how we were limit down. We could have been down 2,000 or 3,000 points on the Dow back that day, August 24th. But individual issues have a 5% limit. And so they stopped trading. The machines kind of recalibrated and the situation slowly reversed that day. So it's still possible for the machines to wipe everybody out too. But on a daily basis, I mean, just pull up a chart of the S&P over the last couple of years. You get these spikes down, and then all of a sudden it magically reverses and goes back higher. And that is through a manipulation of the entire market. But you pull that off not by buying trillions and trillions of dollars of stocks. You pull that off by manipulating just a few of these key inputs and getting the machines to do what you want them to do.
Are you comfortable with record highs in the S&P and in the Dow right now? Are you
No,
a buyer here?
No, there's absolutely no justification for it. But Greg, I sat back in 2010 and said, well, they can't keep this going. There's no way we're going to make it to 2011. And then in 2011, it was like, well, there's no way they're going to make it to 2012. And they keep moving it higher. it only benefits the asset holders. You know, all of this QE, all of this money printing, all of this manipulation of markets. If you had a big 401k in 2008 and it became that proverbial 201k, well, now it's back up to it being a 601k. You're doing great. But if you're one of the, the large majority of Americans, the great percentage of folks that have no savings at all, they, are just scraping by with maybe $10,000 in an IRA someplace, none of this has benefited you. Instead, your cost of living has soared, your taxes have soared, you're getting pulled in every single direction between higher tuition costs and higher healthcare costs. My own healthcare costs have tripled because of Obamacare. I mean, this is not working for the average person, but that doesn't mean that the stock market won't keep going up. There is one fundamental thing that I guess is somewhat as a fundamental affecting this flow of funds, and that's the record low interest rates and negative interest rates. That asset managers around the world look and they go, well, why would I want to own bonds or any kind of fixed income that pays 1% when I can buy some stocks that at least pay a dividend of 2%? So there are some minor fundamental drivers of higher stock prices, but the prices will keep going up as they have, as long as the central planners can continue to influence these key inputs and make the computers do their bidding.
And what do you think could knock them right off their fine white charger? What could happen that they've lost it now? What do you think could happen? What are you looking for as an investor, as a newsletter writer, as somebody that gives advice to all your subscribers?
I was having that discussion with my aunt. I don't know, my aunt, Greg. Anyway, over the 4th of July. And she's a widow and she's got a bunch of money in the stock market still. And she said, I follow the news. What should I watch? What would be the key thing? And I sat back and I thought about it for a second. I said, Aunt Judith, I wouldn't worry about anything until you start seeing headlines every day about the Italian banks or some sector of the European banks really being in trouble. Back, I'm going to itch my nose again, back right in the 2 days after Brexit, the European bank index went down the greatest percentage in 2 days that it had ever gone down, more than during the long-term capital problem, more than the dot-com bubble, more during the financial crisis, more than the earlier Euro crisis in 2010, biggest 2-day drop ever. And that was telling you, this is a problem. You can put the euro on over the course of months back in 1991, but taking it back off is a whole other animal. And like I said, I think this Brexit vote, which is already leading to similar moves to have similar referenda in about 6 or 7 other European countries, it's a death knell of the European euro currency. And that's the second largest, second most widely used fiat currency in the world. You can't just make it go away without having severe repercussions. And in Europe, all of these banks are tied together at the hip. One bank will own another bank's debt or loans, and then that bank will have another bank's loans or derivatives, and they're all linked together. So if one goes, it pulls them all down, Deutsche Bank being the biggest. I would watch, and what I told my Aunt Judith is watch the Italian banks specifically, but really it could come out of Spain, it could come out of anywhere. If you start seeing on a daily basis, runs on banks in Europe, that might be the thing that would overrun the intentions of the central planners.
So you're not comfortable right here because we are starting to see, Mario Draghi talking about this big bailout package for Italian banks, Bank Santander. Deutsche Bank was just deemed the world's most systemically dangerous bank by the IMF and the Federal Reserve. We're already getting those shakings right now. Would you be out of this market now? Would you be still holding on for another 100 points or so, or would you be out of this market now? What would you be doing? What are you telling people?
Well, personally, I haven't owned any stocks other than mine. I just started buying mining stocks late last year. I've been in nothing but physical gold and silver for 5 or 6 years now. Boy, did I look like a genius the last couple of years, right? Come on now, stop now. Now we find out that Deutsche Bank admitted to rigging the markets, gold and silver. Yeah. Oh, and they're primary dealer treasuries and HSBC and Bank of Nova Scotia. They named Deutsche Bank name. So this is a widespread. The advice was sound, but there was massive manipulation at the primary dealer, criminal manipulation at the primary dealer level. So this isn't even a market. I mean, come on. Right. Exactly. And I know why I own that metal. And I've been continuing to buy it, which is what I've been telling people. I mean, the price has fallen for totally uneconomic reasons. The manipulation being one, but again, the gold price is linked to that dollar yen by the computers as well. Dollar yen has risen. The yen has been devalued over the last 3 or 4 years, and gold's gone down with it because the computers trade the paper gold. But anyway, I have used that weakness of the last 3 or 4 years to keep buying. And so now with this recovery, all of my physical gold and all of my physical silver is now at a cost basis less than what the current price is. So that's worked out quite well. But I'm not going to argue with anybody that says, you should have sold all your gold in 2011 with the benefit of hindsight, and you should have bought the S&P and you'd have made 100% and all this stuff. Hey, knock yourself out. The reason I didn't even attempt to do that is knowing full well that at any time, any morning between 2011 and today, I could have woken up and the whole system had blown up. That's how fragile it is. I mean, it's all held together with baling wire and chewing gum, as they say. And so I've been, the fact that the stock market has rallied and I didn't make a whole bunch of fiat currency over the last couple of years, that doesn't keep me awake at night at all. I've slept very well knowing that I'm financially protected with my metal. So anyway, I haven't been in the stocks for the stocks, the Ben Bernanke. I haven't been in the stocks for, years now, since 2008, I guess, and I'm not planning to buy any at present.
Okay, so where are we with gold and silver? I know you wanted to talk about that. I want to get into talk about Turkey as well, because I know you follow geopolitical events, and one of the places you follow is Turkey. But teaser. So let's talk about gold and silver first. Gold and silver. What's your take on what's going on with gold and silver? Gold and silver's had a nice run up, 28, 29%, something like that, or it's down a little bit here recently. Silver's had a nice run up, also down a little bit recently. What do you tell people who hold gold and silver? Is this sell, 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 or buy, 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 or hold, hold, hold?
Well, I do think we've turned the corner. I think we came down in both metals and found what seemed to be almost a physical floor, about $14 in silver and somewhere around $1,100 in gold. And prices, obviously, we've had a great year, and the miners have confirmed that with just a huge move over the last actually began 6 months ago right now. The miners are up 160% or something like that. It's been this tremendous move. So I really think that resumption of the former bull market has begun. Now, that said, what is driving price? There are some physical fundamentals, okay? Like I said, the death of the euro, the impending death of the euro currency is huge. That's a big thing, because if you live in Europe, you're taking a lot of risk continuing to hold euros, right? If they're going to be devalued and it's going to go away. Even more important is negative interest rates, and that is the long-term consequence of this foolish central bank policy of pumping bubbles, and now they're at the point where we're talking about direct monetization of debt going forward and money handouts. I mean, this is ridiculous. That is driving negative interest rates worldwide. And always the traditional argument against owning physical gold is that it doesn't pay a dividend. It just collects dust sitting in a corner. Well, hell's bells, no dividend at all. It beats the pants off a negative 1 or 2%, right? So all of a sudden, really big institutions, especially across Europe, are demanding physical gold as an investment. And by big institutions, I mean insurance companies, pension funds, people with big, massive currency reserves that look at gold and think, well, I could buy a bond, has a negative yield, and hope for capital growth, or I could buy gold with no yield and hope for capital growth. And look, it's already up 25% this year. So there are some physical factors driving gold, but this is primarily a paper gold and again, HFT thing this year. Gold took off in the beginning of February after Japan instilled negative interest rates. And instead of weakening the yen got about 10% stronger in about 10 days from the 1st of February to the 11th of February. And over that period of time, gold went up about $120 from 1140 to 1260. I immediately started getting nervous on the stuff that I follow every day, watching the speculative positions, the commercial or bank positions grow, and started waving warning flags to everybody going, okay, this is just another repeat of what we've seen for the last 3 years. The banks are going to come in and smash price. Be very careful. Well, what instead has happened is these fundamental factors of physical gold have in fact prohibited the banks from rating price flushing the specs back out and profiting from all their short positions, as we saw from 2012 through 2015. And it's that physical demand that is prohibiting them from doing it right here today as we speak. We're at $1,330. Now, that doesn't mean we're without risk, though, to the paper price, because the dollar yen that we've talked about has moved up 5 or 6% in the last week as Japan has announced more debt monetization and maybe helicopter money. If that dollar yen, which has gone from 100 to 106, goes back to 115, the price of paper gold is going to go down. I mean, it just is, because these high-frequency trading computers are going to see that move in the yen, and they're going to sell their paper gold. If that forces interest rates back higher, I mean, the long-term interest rates in the U.S. got all the way down to 2.1% a week ago, 7 days ago. Now they're back up to 2.30. If they go back to 3, these machines are going to sell their paper gold. And so people need to realize, when we talk about the gold price, the price that's shown on Bloomberg, the price that's found in this derivative market in New York, it doesn't have anything to do with gold. It's like you're discovering that it's the two things are not related. The paper derivative price and the actual value of the physical metal. The banks create the paper derivatives. They sell them to the speculators that are looking for gold exposure. Gold goes up or down based upon, the supply and demand of those paper derivatives. And that somehow is used as a basis for physical price. I mean, it's a convoluted, screwy system that we hope we're moving toward the end of. But for now, we'll just have to see what happens next. The key things, anybody that is worried about the short-term fluctuations in price, don't worry about so much the fundamentals, and the demand stuff you read out of China. Just watch how these high-frequency trading computers are trading the paper. And the key influences there are interest rates and the dollar yen. It's really not a whole lot more complicated than that.
Are they hoping for a no bid? I mean, could this situation that you're talking about could have a situation where there's just the vaults are cleaned out, the physical's gone? I mean, I've heard that scenario a while. They just seem to have gold. I have people comment and say, "Well, I can get all the gold coins I want. What's going on?" Of course, Rob Kirby will say you can't put your hands on a ton of gold or 5 tons of gold.
Right.
And trying to get tonnage for rich people is a whole different story than walking into Joe's Coin Stop on Alameda Avenue and getting yourself 100 ounces of gold. What's going on? Can there be a time? Can what we're seeing offer up a situation where the gold is not available for delivery?
Yes, and that is the epic battle that we're watching right now. And we talk about it at TF Metals Report every day, because what we're all waiting for is the eventual destruction of this paper derivative pricing scheme. And that's really what it is. What would cause the destruction of that pricing scheme? It would be a delivery failure, not necessarily on the exchange itself, just anywhere. I mean, there are unallocated and pooled accounts of gold worldwide where somebody, shows up and they buy themselves, however many ounces of gold, and the company that sells it to them says, well, we'll just keep it here in the vault, and if you ever want it, you can come get it. So don't worry about it. Well, when somebody actually shows up and they want it, and they're told, fill out this form, and we'll try to get it to you in 90 days, that will set off a cascade, because what's really behind the paper derivative structure still has to have some physical gold. The key thing now that we're watching is that physical demand, is the negative interest rates that are driving physical demand, driving these pension funds, insurance companies, whatever, to say, I want gold, but I don't just, I've read enough stuff. I don't trust keeping it in one of these pooled accounts. I want the real thing. It's the extraction of the real thing from the system that teeters the system. And we want that system ultimately to fail so that we can actually find and discover a price that's based on the true exchange of physical metal, not these paper derivatives. You see what I mean?
Yes.
So that's what we're ultimately hoping for. And these banks that make a market and create the derivatives on the COMEX, they're doing everything they can to supply the derivative to the derivative buyer to tamp down price. We call it the total open interest, the total amount of contracts that are traded, that are open on the COMEX. That's gone from 380,000 contracts at the end of January to as high as 660,000 contracts a week ago. Okay, so these banks are flooding out derivatives. They're not hedging. We know how much hedging is going on in the world. These banks are just simply trying to flood out these derivative contracts to meet the demand and keep price down. And the reason why that's so important is in the West, investors buy things that are going up. They don't buy stuff that's going down. They're always looking for alpha. They're always looking for big returns. And when things are generating positive returns, you get this kind of virtuous cycle of people wanting more. In gold, that is a significant, that's a death threat to these banks. Because if price continues to rise, as interest rates continue to fall, demand continues to go up and physical demand continues to go up. And if we can clean out the physical, and these banks are currently living off of flow, trying to match up orders and match up expiring leases and all this kind of stuff. The banks suddenly run out of the physical to meet that demand. That's when the whole confidence scheme, it's a confidence game. It's a confidence that, okay, I can always get my gold if I want it, but if that confidence gets shattered, the system will fail, and then we will finally get true price discovery. That seemed like a long, convoluted answer. I might have had too much coffee today, Greg. I hope that made sense.
How close? Well, I'm going to ask you a short question. How close are we to that day? How close?
It's impossible to say, Greg. It really is. I don't mean to make it sound like I'm trying to talk out of both sides of my mouth, but the system is so deliberately opaque that you don't have any idea what the actual delivery obligations of these banks are. And you don't have any idea how much gold is really in the GLD. You don't really have any idea how much gold is available for delivery on the COMEX or in the LBMA. I mean, the LBMA has gone so far that one of the best indicators we used to have of physical tightness were these gold forward rates, the GOFO rates. They printed them forever. We could go back and look. You'd have 25 years of history of GOFO rates. You know what? They just stopped printing them about a year ago. So they do everything they can to keep us in the dark, which is why it's impossible to say, oh man, next Tuesday it's all going to end. You have to think of it, though, as kind of like your local grocery store. You know, you have this confidence that you don't have to go to the store today because you can always go tomorrow. Yeah, I'm out of milk and I'm out of bread, but I'll go tomorrow. There will be milk and bread there. And the grocery store lives on this just-in-time delivery and inventory management. And the banks, the bullion banks that are responsible for delivering physical gold around the world, but primarily through London, they are also living now on this just-in-time inventory management. What happens, though, when there is a crisis, when there's suddenly a lack of confidence that the delivery truck's going to come tomorrow because of an impending blizzard or a hurricane? Well, everybody goes to the store at once and cleans out the shelves. That's what I'm talking about. Eventually, there will be a crisis, a delivery failure that'll rupture the confidence that that gold is there, that you can get it whenever you want. Everybody will come at once, and the system will just go poof. COMEX trading will probably just halt. They'll cash settle out the contracts, and they'll just say, well, so much for that. And then we'll just see where price is at that point, where to actually buy gold, you have to actually find a willing seller of gold, not just the paper derivative. Again, it's coming. I'd love to say it's going to happen this fall, and it might. It might. I'm just patiently waiting. And as long as the price is down here, I'm just going to keep buying it because I know the price, once this system is finally broken, the price isn't going to be $1,300 an ounce.
Silver. Let's go on to silver. Some quick notes on silver. You want to talk about that?
Yeah, no, I do, because there's a lot of, I think, again, people have to understand we're talking about the paper derivative trading setting the price, okay? A lot of folks, there's all these people out there talking about silver like they know what they're talking about. Oh, and isn't it encouraging that silver isn't going back down and silver's hanging around 20? And to some extent it is. But the key reason why silver's hanging in there has nothing to do with silver or even paper silver. I think the big driver of why silver is still $20 an ounce is copper. Now, that doesn't make any sense at all. Why are those two related? Well, silver, besides being a monetary metal, is also an industrial metal. And these computers, which trade the paper derivative on the COMEX and worldwide, they see copper moving up. They see a turn in the copper price. They see copper doing positive things, what we call technically, like getting back above its 200-day moving average, which is an important technical feature, and that's currently where it is. That has a spillover effect in supporting the paper price of silver. So yeah, you can say, oh, there's physical demand, there's all this kind of stuff. Great. The main reason silver ran from 18 to 21 and is still at 20 is at the same time copper has reversed and moved back above its 200-day moving average. If copper continues to move higher now, it's going to drag silver with it, and silver is going to go to 22. But if in the next week or 10 days or 2 weeks, copper reverses and heads back down from 225 to 210, silver is going to go back to 18. That might sound like it's real simple and oversimplification. I can assure you that it's not, okay? The day-to-day movements in these paper metal prices are all because of how the high-frequency trading machines are affecting to their stimuli, their inputs. And in silver, one of the key inputs is what is copper doing? So it's, again, I wanted to stress that because it really is the explanation as to why silver is doing what it's doing on a daily basis.
Okay, we're moving on to geopolitical. You write about geopolitical and you watch certain countries, key countries. And one of the countries you happen to watch, you told me this in the pre-interview, was Turkey. Now, having an expert on Turkey or quasi-expert on Turkey, you've been watching it, told me for 10 years. What in the heck is going on with Turkey and this coup attempt? Some people in Europe say, they had pre-arrest records. People in the EU said that there were pre-arrest records, and it looks like a phony coup attempt that Erdogan, did himself. What's going on with Turkey, and how important? Why should we watch Turkey, or should we care about Turkey?
Well, I should state first of all, it's not like I have a PhD in Turkish studies or anything like that. It's kind of a hobby.
We understand.
It's kind of a hobby of mine. I first started following it about 10 years ago, about the same time Erdogan came to power. And I started reading about it and learning more about it. And I just think it's a pivotal country. It always has been, going back to the time of Constantine, linking East and West. And with the current kind of civilizationary battle between East and West and Islam and Christianity, and how that's always been a battle for the last 15 centuries or whatever, I just got interested in Turkey and I started learning more about it. Could this coup have been pre-planned? Of course. Erdogan is that kind of guy. A lot of folks compare him. I've seen some cute little photoshopped images of him and Hitler. He reminds me more of Mussolini from a historical sense, in that the Turkish people, you saw them show up in the streets Friday and Saturday. One, they did that from almost an Islamic fervor. You got that going. But also, what's the historian say about Mussolini? The Italian people liked him because he made the trains run on time, right? There's some of that with Erdogan in Turkey, that he's brought some civility and civilization and higher incomes and all that kind of stuff to the average Turk. And so a lot of folks actually like him. But here's the problem. He has taken a secular Turkey that was deliberately set up to be secular by Ataturk following the Ottoman Empire. Ataturk, whose name actually means father of the Turks. Okay, he's the father of modern Turkey. And he wrote the Constitution and set it up so that it would always be a secular country. There wouldn't be this Islamist, Sharia law, all that kind of jazz. He didn't want Turkey to be that. He wanted Turkey to go west. He wanted to be a secular nation. And so within the Turkish Constitution, the military actually has a determined role, almost as if a separate branch of government, to have a coup whenever they feel that the current elected representatives or whatever are moving away from this secular structure that Ataturk set up. There were coups in 1960, 1970, 1986, or whatever it was. I remember seeing the list last weekend. This is nothing new. And in a sense, the military is doing exactly what they're supposed to do in response to what Erdogan has done. Could it have been pre-planned and staged for him to get power? Absolutely. Tyrants have been doing that for years. Look at the Reichstag fire, right?
Right.
The fact that there were lists that were already made, whom to arrest should this happen, they were probably made regardless of whether this was planned, because a tyrant like Erdogan would naturally have those lists made up ahead of time. Some say those lists are already, you and I are already on those lists here in the U.S., Greg. That, there are a lot of folks out there that think guys like us will be sharing a boxcar one day. I don't know whether it was planned or not. All I know is it was a likely outcome to what Erdogan has done, given the way Turkey is set up constitutionally. And personally, I'm disappointed that it failed, because I think he's a really bad guy.
Do you think that this is bad for the world? Why do you think this is bad? One of the things he's done is we have our we're sharing an air base there in Syria.
Right.
and we have 50 nukes, and he sent his investigators into the airbase, and I'm thinking 50 nukes. Woo, that'd be a prized possession if you're an Islamic, you want to go towards Sharia and have, a totally Islamic theocratical state. I mean, you'd have 50 nukes. Yeah, nobody's going to blow in and try to take you over, right?
Right. Well, and anybody that's willing to really do some digging, Zero Hedge did a long expose, great journalism that exposed the links between Erdogan's son and the selling of black market crude oil by ISIS.
Yeah.
So, I mean, this guy's a bad dude, man.
A NATO country, yeah.
Yeah.
Yeah, we didn't know that was going on, did we?
No wonder that we weren't doing anything to ISIS and why this guy's a bad guy. And I was really optimistic for about 6 hours on Friday that something good had happened. And now I think that was Turkey's last chance to be rid of him. And they're descending into darkness, basically, at this point. And it's bad for the world. But at the same time...
Wait. Why is it bad for the world?
Because of just the historical significance of Turkey and where it sits geographically and the role that Turkey has played for all of these years, millennia, basically. And now they're going to continue to drift, let's call it southeast. I mean, you run the risk of it becoming a fiefdom run with Sharia influences like Saudi Arabia. Look, hey, for those folks, if they want to do that, knock yourself out. But I think nobody looks at Saudi Arabia as a friendly regime to the West or to the U.S., right? So none of that is good. Now, in the grand scheme of things, I think we're all in trouble anyway, because the time of the U.S. dollar being the supreme currency, that's all going by the wayside. And we're entering into a new global financial paradigm here in the 21st century anyway. And that's going to be run by creditor nations. And I think Turkey is going to end up pairing with Russia and China and Iran and some of these other nations that have dollar reserves and gold. And they're going to be the dictators of the system in the 21st century. So it's all kind of headed in a uncomfortable direction anyway. I just would have preferred to see just geopolitically, and for the people of Turkey that don't want to go down the path of Sharia and Islamic law and actually have a functioning democracy, I would have preferred to see the coup actually succeed.
And you're thinking, we're going to close on this though. You're thinking you're not given very good. There's near-term strength in the dollar. You're saying that don't trust the strength in the dollar. It's not going to keep. We're not. It's not 1980 all over again, is it?
No, I mean we're not going to raise rates to 20% like Volcker did in 1980. That's not happening. And the path into negative rates is impossible to get off of at this point. I would encourage everybody, actually. A friend of mine named Grant Williams he's a money manager out of Singapore, and he puts out great videos. Somebody, if you're listening, just YouTube Grant Williams and the word crazy, which makes it sound like Grant Williams is crazy. Crazy is his latest production, and it's about how negative interest rates are here to stay and what that means going forward. And the whole Western world is getting sucked into this creation by the central banks. So I'm not optimistic that, years of bliss and euphoria and happiness are coming our way. The world is changing. The financial world is changing. And again, it's kind of the message of TF Metals Report. That's why I try to follow everything, because at the end of the day, people have to prepare for an uncertainty of tomorrow. I think a lot of people look at tomorrow and they assume it's just going to be just like yesterday. And in the grand scheme of things, it's most definitely not. And we have to prepare for that.
And you're saying the negative rate is a big trend, not a little blip downward,
right,
which is dollar negative and gold. The overarching thing. Dollar negative, gold positive.
In the short term, the dollar may continue to rise because it's compared to other fiat currencies. When you look at what's called the dollar index, that index compares the dollar to primarily the euro, but also the yen and the pound and a handful of other fiat currencies. And so when you compare it to the euro, which may be going away, to the yen, where the Japanese are suicidally hell-bent on creating as much yen as they possibly can and monetizing their entire society, that makes the dollar look pretty good. And so, I don't know, maybe the dollar in the short term, a couple of years, could continue to rise. But this adage that somehow the gold has to go down because of the dollar going up, I don't think that's the case anymore. The key thing going forward is the banks trying to manage the gold price. By managing the price, they can manage sentiment. By managing sentiment, they hope to control physical demand, because physical demand is what will break the banks. That's how the whole circle fits together.
TF Metal Reports, you charge, I think, a whopping $12 a month for that production at TF Metal Report. We'll put links in for your sign-up page for TF Metal Report. Is there some free information on the front? I know you tease everybody. You have the first few lines, and then you want the rest of it. You want to be a subscriber, but you do give them a little taste of what it is, right?
Yeah, oh yeah, absolutely. There are forums that are brilliant, and the insights added by the members of the site are actually more valuable than what I put out there. But for my daily chart watching and projections of where price is going in the short term, and for the podcast that I record every day, yeah, all of that's for about 40 cents a day. And you know, we could charge a lot more, but I mean, this is about helping us prepare for what's coming. And so the last thing I want to do is charge $100 a month and price people out. You know, we try to make it fair, you know, to keep the lights on and pay for my health insurance, like I said, that's gone up triple since Obamacare.
Mine's doubled, so, you know, Obamacare, it's going to be cheaper. The biggest policy lie in history, that is Obamacare, but I digress. Craig Hemke, thanks for joining us today on USAWatchdog.com. Great interview, great stuff. Thank you very much.
Thanks, Greg. It's always a pleasure.